wondered, how are Bursa Malaysia's marketplace being monitored? Would you like to know how the marketplace is maintained orderly and fair? Welcome to Bursa Malaysia. We are the frontline regulator of the equity and derivatives markets. So, what does this mean for you? Through Bursa Malaysia regulation, we ensure the markets you invest in are orderly and fair, so that you have timely, accurate, and complete information to make informed investment decisions, are able to trade in a fair and efficient environment, have confidence in your brokers to provide secure and trusted services to you. So, how do we protect the marketplace? We have multidisciplinary teams in Bursa Malaysia regulation that focus on specific areas while collaborating with each other to provide a comprehensive network of safeguards for investor protection. We also work closely with other regulators and law enforcement agencies. Real-time surveillance of the market. We have a market surveillance team that acts as your market police. They monitor the stock market against irregular trading activities in day-to-day trading. This team uses an automated surveillance system to monitor trading in the equity and derivatives markets in real time. Should irregular trading activities be detected, this team of specialized analysts will fact-check and engage the brokers involved for their immediate action. Supervision of intermediaries. As safeguarding the integrity of the marketplace is paramount to us, our intermediary supervision team secures the protection of your trading and deposits through consistent broker monitoring and inspection. Disclosure. Continuing listing obligations and gatekeeping of listed companies or products. To be ASEAN's leading, sustainable, and globally connected marketplace, Bursa Malaysia places high emphasis on the quality of our listed companies. This begins from the approving of new listings on the exchange, through to ensuring that listed companies remain of quality through governance and compliance, as it is imperative for investors to be well informed in the fast-paced financial world. Bursa Malaysia regulations listing and corporate surveillance teams monitor companies' corporate announcements so that they are disseminated to you in a timely and accurate manner. Enforcement action is taken should there be any failure to do so, or should there be any material inaccuracies to the announcements made. As we are also a venue for listed companies' secondary fundraising, our relevant departments work together to ensure investors' funds are always used as mandated. We have a dedicated team of finance experts to examine corporate disclosures, including financial reports, so that they are accurate and timely that you can rely on. Within Bursa Malaysia regulation, we have subject matter experts that look at the various international sustainability reporting frameworks that are constantly evolving to ensure that our disclosure requirements are appropriately benchmarked. This ultimately drives the desired improvements in our PLC sustainability disclosures as well as practices. Taking enforcement action. So what happens when the persons are regulated by us? Be they brokers, advisors, listed companies, directors, or their representatives, breach our rules. Appropriate action will be taken against them. The types of action taken would depend on the severity of the breach. Suspected breaches will be investigated, and enforcement actions will be taken if the breach is proven. Our enforcement proceedings and actions are consistent and fair as cases are discussed in a robust manner through our regulatory committees, comprising independent individuals with relevant experience and backgrounds. Policy and rulemaking. Bursa regulation is the guardian to the 10 rule books of the securities and derivatives markets. Rules drawn up by the regulatory policy and advisory team are always outcome-focused. Industry or public consultations with the relevant key stakeholders will be undertaken, alongside rigorous benchmarking processes to ensure the rules are relevant, effective, fit for purpose, and on par with international standards. Each multidisciplinary team in Bursa Malaysia regulation is intertwined and interact proactively to ensure high standards in market integrity.
Hi everyone. Hi, welcome to this webinar brought to you by Bursa Malaysia and managed by LifeGem. So my name is Shaz and I will be the moderator for today's session. So our title today is Islamic Financial Planning, Wealth Management. Anyways, if you can listen to my voice clearly, please type yes in the chat box. So I know that you guys are listening to me. Okay. Managing finance is not just about saving money or sticking to a budget. It is about creating a plan that aligns with your value and helps you build a secure future. Islamic financial planning take this one step further by blending ethical principle with smart strategies to grow and protect your wealth in a way that stay true to Sharia guidelines. But how do you ensure your investment not only comply with these principles, but also work effectively to meet your goals? What is the best way to navigate the world of Sharia compliant opportunities while manage your risk and achieve the sustainable growth? So today, we are honored to have Mr. Faiz Wahab with us, share his insight on the Islamic financial planning and wealth management. Hi, Mr. Faiz.
Hi, hello.
All right, so just going to read a bit of disclaimer before we proceed. So allow me to make a short disclaimer. Please be reminded that everything that is shared in this session is mainly for educational purpose, and by no way we are providing you advice to buy or sell any security. So you are 100% liable if you make any investment decision. All right, allow me to introduce our esteemed speaker for today. So he is none other than Mr. Faiz Wahab. Mr. Faiz Wahab is a financial planner representative licensed by Securities Commission Malaysia and financial advisor representative approved by Bank Negara Malaysia. He has a vast experience in the financial industry. Mr. Faiz is also an active member of the Malaysia Financial Planning Council, which is known as MFPC, and also HRDS certified trader. He is also an active trader, investor in the Malaysian stock market, with the financial planner with the expanded scope license. He also provide a stock advisory services to his client, which include REITs and ETFs. So Mr. Faiz, also a graduated from with a Bachelor of Degree in Education from IPGM and also a Master Degree in Business Administration from UK. With that being said, let us warmly welcome Mr. Faiz Wahab to the floor. So good day, Mr. Faiz. How
Good
are
to see you.
you?
I'm good. Alhamdulillah.
And I really hope you are doing well. Then Alhamdulillah. I heard that you say you are well. Okay. I'm going to pass the webinar to you.
Okay, sure.
All right. All the best.
So, can I share my screen? Can you see my screen right now? Wait,
Not yet. Oh, yes.
Yeah, okay. Right. Okay, so Assalamualaikum and very good day to everyone. So Islamic financial planning. So Islamic wealth management. So as mentioned by Shaz before, the financial planning is applicable to everyone, but the Islamic financial planning or Islamic wealth management, it brings this further where the ethical value and the social responsibilities are being emphasized in this school of thought of financial planning or wealth management. Because in the conventional way, people just thinking about how much money they are making, how much money they retain, and how much money that they have or they generate from their financial planning or investment planning. But when we are talking about the Islamic financial planning school of thought, it brings more than that. It's not just it's not just about how much money they I make, but how much social responsibility that I do also. Okay, it's not about purely profit in terms of money. Okay, but in the Sharia or Islamic point of view, we acknowledge that yes, we need to be result oriented, profit oriented, but at this same time, the profit is not only being measured by the monetary value, but it's also measured by the social responsibilities and how well people around you. In the conventional way, we just thinking about us, me, I. But in the Islamic point of view or the Sharia point of view, the money that you make is for you, is for your family, is for your neighbors, and also peoples around you, right? So this school of thought enhance or bring further one step ahead, one step further of the conventional wealth management to another level. Okay, so what we want to cover for today's session, there are four main things that we will discuss for tonight's discussion. First of all, we will need to understand the fundamental of financial planning. It's either conventional or the Islamic wealth management, Islamic financial planning. It need to build from the same thing. Okay, so it is very important for everyone to understand what are the main things, what are the things that we need to understand in the financial planning, right? So there are so many things that we need to cover, but I will try to point out a few important things, okay, such as how we need the time to work with us rather than the time works against us. Because every one of us, we have a limited time. You and I, and everyone that join on this station, we have 24 hours a day and 7 days a week. We cannot have more than that. We cannot have less than that. Okay, everyone have the same time, but how we want to make the time works with us, because as we all know, times is very valuable. It more precise, it more precious than the gold itself, right? So we need to understand the relationship between money, wealth, and also time. Because if you do not understand the basic concept of wealth and time, then you will lose your money over time. Okay, you think that I gain more and more money, but actually you are losing more money instead of you are making more money, right? So that's the first principle that we need to understand. Okay, next one, we need to understand what are the differences between the conventional and the Islamic financial planning. So there are 5 stages in the Islamic financial planning. We will go through each and every stages, right, in detail later on. Next one, we will understand what are prohibited activities in Sharia wealth management, because in the Islamic point of view, okay, there are some activities that you can do, okay, they are allowed, and some are prohibited. So you need to distinguish what are allowed and what are prohibited, okay, so that whatever wealth that you build is Sharia compliance, and you won't getting any penalty. Okay, so I put it as a penalty, right? So in the some scholars they are putting denda lah, denda, right? So and also we need to examine some of the Sharia compliant instrument, and what are the instruments that we can use as investor, as a traders, that Sharia compliance. That's first and foremost, and how we can use this and suit it into our portfolio or our profile. Okay, and how you can adjust our portfolio according to the market situation. Right. So the basic of financial planning. So we need to understand the concept of compounding interest or compounding return. Okay. So let's say you're putting 100 ringgit today's. Okay. Let's say you are getting 5% in terms of return. Okay. So next year it will become 105. Let's say another year you get another 5%. So these 5% are built up on the 105. It's not based on the 100 ringgit. Okay. So in the simple interest point of view, okay, there are different between the simple interest and also the compounding interest. In the simple interest, okay, simple interest concept, the first year you're getting 5% based on the 100 ringgit. The second year, 5% based on the 100 ringgit. And the third year, 5% on the 100 ringgit. Okay, so it's not compounding, right? So based on what are the initial amount that you are investing. But in the compounding return or compounding interest point of view or concept, okay, so the first year you put 100 ringgit and you get 105. Okay, 5%. So you get 105 at the end of the year. Okay, so the second year, your 5% based on 105 ringgit. So it won't be 5 ringgit, it will be 5 point something. Okay, so let's say 110 ringgit. Okay, 110 ringgit plus, right? So on the third year, okay, your 5% is based on this 110 ringgit. And over the time, okay, the money will grow much bigger. Okay, we are talking about the return or the interest. Okay, so the return and the interest will grow exponentially over the time. Okay, right. So let us put it this way. Okay, you have two options. First one, you get 10 cents. Okay, but okay, this 10 cents will double for 25 days. Okay, let's say the first day 10 cents, 20 cents, 40, 80, 1 ringgit and 60. It will double for every day for the next 25 days. On the other hand, okay, on the second choice, you have this 1 million ringgit without any compounding effect. Okay, so usually people will straightforward. Oh, between these two is very straightforward decision. Obviously, I will take 1 million ringgit. Okay, because 1 million ringgit, it seems like very a lot of money, right? Compared to 10 cents. Okay, 10 cents you cannot go even to the toilet. Okay, but for 1 million ringgit, you can go so many times to the toilet, and also you can buy so many things, right? So straightforward, people will choose 1 million ringgit. Okay, but here's we need to understand the power of compounding effect. Okay, right. So let us run the scenario for 25 days. Okay, so the 1 million ringgit initially 1 million ringgit on the day 1. Okay, at the end of day 25, it will be the same 1 million ringgit. Okay, but on the other hand, okay, if you take the first option, which is the 10 cents, which is double every day for the next 25 days, okay, we can look at from 10 cents, it become 20, 40, 80, 1 ringgit 60, 3 ringgit 20 cents, 6 ringgit 40 cents, 12 ringgit 25, 51 ringgit 100, 204, 400, 800, 1,600, 3,200. It's still not lucrative yet, okay, but it goes to 6,000, 13,000, 26,000, 52,000, 104, 209, 420,000, 840,000, and at the end of day 25, it become 1.6 million. Right? So you can see at first the money is not that much. Okay, we're talking about the return itself, and the number is not that lucrative. But when we look, okay, at the last 5 days, okay, which is day 20, 21, 22, 23rd, 24th, and 25th, okay, we can see the number become much more significant. So we need to understand here, when we are playing with the compounding effect or compounding interest or compounding return, okay, the times need to work with us. It means that, okay, the longer the time, okay, the higher the compounding effect. Let's say we are talking about, this is about double every day. But let's say we look at 5% or 10% in fact, okay? Even for 5%, it will become very significant when we stretch the number of years of return up to 25 or 30 years, right? For the first 5 years, you may look at the compounding effect that is not too much for you, okay, but over the time, you can see 5% is a lot, okay, especially when your fund is quite significant. So when we're talking about time, okay, time needs to work with you. So let us, okay, look into the chart. Okay, so this is the comparison for the 1 million situation and the 10-cent situation. Okay, we can see, okay, during the last 5 days, okay, the compounding effect grows exponentially. Okay, it grows exponentially. In fact, it surpassed the 1 million 1 million ringgit threshold. Okay, it become 1.6 million. Right. So let us go into another situation. We have these two good friends. Okay, our Avengers. One of Iron Man, and the second is the Captain America. We know that Iron Man is born as a rich guy. Okay, so he feel that, oh, I don't need to save my money because my dad can put a lot of money to me. Okay, I can just inherit whatever the stock industry have, right? So he never think about saving his money. But on the other hand, we have this poor guy, this Captain America. So his salary is not that much. Okay, so he's a normal fellow as us. Okay, so he understand that he need to save his money. Okay, he need to save his money as early as he can. Okay, so we know that Captain America being recruited into the army. Okay, and then he gone through his training, and after quite some time, he's been locked into the ice, and he cannot save his money anymore because he's locked in the ice. Okay, but on the other hand, our friend Tony Stark can still survive, but he only get the feeling, or he understand he need to save some money after he's being captured. Okay, because during he is being captured, he understand that, oh, he lost his wealth and so on. And so after that, then only he understand the importance of saving his own money. Okay, he cannot rely on the stock industry anymore. So this Iron Man only save his money, okay, after the first 10 years in his 30 years of life. Okay, but Captain America, okay, he managed to save for the first 10 years before he's being locked in the ice. Right? So we try to look what happened to these two guys. Okay, so let us look into Captain America. Okay, Captain America. So he's willing, he is able to save 100 ringgit every month. So every year he managed to save 1,200 ringgit. Okay, for the first 10 years. Okay, so he start to work at the age of 20. So he managed to save 12,000 ringgit. Okay, before he's being locked into the ice. So at the age of 30, after he's being locked into ice, okay, the money works by itself. So from 16,000, it grows to 53,000 at the age of 50 years old. On the other hand, for the first 10 years, Tony Stark he is not able to save any of his money, but he's only save his money at the age of 30. Okay, the same situation as Captain America, 100 ringgit or every month, and it become 1,200 ringgit for every year. So all in all, okay, all in all, after 50 years, Tony Stark only have 40,000 ringgit. Okay, 48,000 ringgit. Compared to Captain America, he has 53,000 ringgit. Okay, this is the beauty of compounding return or compounding interest concept. Okay, because we know as we start our saving or our investment earlier, okay, the money, the time will work with us. But if we start it later, okay, the time will work against us. Right? As we see, as we look into the comparison between Captain America and Tony Stark, Captain America only saved 12,000 ringgit, and he able to get 53,000 at the end of age 50. Okay. On the other hand, Tony Stark need to save 24,000 ringgit, and he only managed to have 48,000 ringgit at the age of 50 years old. So here we understand that, okay, we need to start as early as we can. These are applicable to everyone. If you can start early, okay, so the amount of money that you need to have much smaller compared to those who start later than you. Okay, and please, okay, please start early as you can. Okay, because if you miss, okay, if you miss 1 year, it's not short time. Okay, 1 year. Okay, but it will give you significant impact. Okay, so my advice to everyone of you is that, okay, you need to start as early as you can. Okay, I heard some of the people can, 100 ringgit from Drake area or Ampao, it's doable. Okay, some of you might start as early as 10 years old, or Form 1, 13 years old. Okay, so this is very crucial, especially for parents. Yeah, for parents, is if you can save your money for your child, okay, it will help them when they want to further their study, okay, later on in university. But if you cannot save money for your child, then they need to make some education loan, or you need to fork out your money. So it will helps you if you start early, especially for your child's education. Okay. Same goes to your retirement planning, or your travel planning. Okay, if you can start to save early, it will help you to reach your goal much earlier and easier compared to those who starts later. Okay, why I say that we cannot let time works against us. So we need to understand the concept of inflation. Okay, we need to understand the concept of inflation. So each and every year, our money lose its value, okay, to the inflation. Why inflation happens? Okay, why inflation happens? So we know that every year people need to have raise in their salary. So when the company raise a salary to their workers, they need to bear additional costs, and this cost will be transferred to their customer. So what are the companies they want, how they want to manage this additional cost of raising salary? So they need to transfer to the customer or the client. They need to raise the goods price. So as over time, okay, let's say you're buying, let's say my during my time, okay, I can buy nasi lemak at school for 50 cents, okay, 50 cents. If I can bring RM1, I can settle my foods and drinks already. But in nowadays, if you give money to your kids, right, to go to their canteen or not, RM1 is not enough. Okay, you cannot eat. You need at least 2 or 3 ringgit to get some food, I mean nasi lemak, and some drinks. Okay, so it can goes up to RM50 and 3 ringgit. Might even goes to 4 ringgit. It depends on your locality. If you are living in the KL and Selangor, I think not lower than 3 ringgit. Okay, for pocket money for your child. Okay, during my time, my father give me RM1 and I can buy everything. Okay, so that's how we see that same things. Okay, but we need to pay more to get the same things. For example, nasi lemak. Before this, maybe you can buy nasi lemak for RM1, but now on, okay, you want to get a proper nasi lemak with anchovies and nuts, and also boiled egg. Okay, not a very small piece of boiled egg. I am talking about half of the boiled eggs. It might cost you RM2.50 or RM3 right now. Okay, back then we can buy for only RM1. Okay, so that's the understanding of inflation, where as we know, before this, when we go to the shopping mall, you bring RM100. Okay, you bring RM100 and you can get everything. Okay, you can get everything. But nowadays, okay, you bring RM100, you only can get maybe half of your cards. Okay, so that's how money, okay, our money being devalued each and every year. Okay, so let's say for this KFC, right? KFC. So basically the same package, okay, to chicken, some wages in 2013, you get some wages, but in 2019, you only get fries. Okay, you get 1 cup of drinks. Okay, in 2013, you can get this combo for RM8.95. Okay, but in 2019, okay, this combo, 2 pieces of a chicken, okay, you need to pay for RM14.20. And if we put it in today's value, okay, it must it will be much higher than 2019. Okay, so that's why, okay, as inflations are eating our money, okay, some of the people, they just want to save their money. Yes, it's very good to save your money. Okay, let's say you save about 300 to 400 ringgit each and every month. That's good practice. But you need to understand, if you save your money, let's say you put in your what tabung ayam, you know, tabung ayam, yeah, or you put in under your bed or some box, okay, right? So it is a good practice. I would not say there's wrong, something wrong with that. No, it's good practice, okay, but it's not enough, okay, because your 100 ringgit is become devalue each and every year, okay. We are talking about 3% to 4% each and every year. We are talking about the general inflation in Malaysia, okay. But when you're talking about specific inflation, such as for medical inflation, it can go up to 10%. Education inflation, it can go 7 to 8%. Okay, so you need your money to work much faster compared to the inflation. So you need to beat the 3 to 4% benchmark of inflation. Okay. Moreover, for Muslim, okay, you need to add additional 2.5% for your zakat. Okay, so for Muslim, okay, so some people, oh, I save money, I need to pay for my zakat also, right? So why Islam Islam put it in this way for zakat payment? Okay, because Islam are encouraging, okay, the Islamic they are encouraging you to work harder, okay, so that you can gain more and more, and you can beat the inflation and also the zakat that you need to pay, right? So if you are having that 10,000 ringgit, okay, and you just put it in some of your safety box, okay, or in your tabung ayam, or some under your pillow or under your bed, okay, this money will be eaten by inflation, okay. If you put under your bed, it might be eaten by the termites, right? Right. So let's say you put in the safety box, okay, safety box, this 10,000 ringgit become devalue over time, and you can see it become half after 30 years, right? So what if you put in some low risk investment? We're talking about 3 to 4%. Okay, this 10,000 ringgit become more than double after 30 years. Okay, so that's why you need your money to work harder. Okay, so yes, you work hard to earn your money, but you need to make sure your money are not losing due to inflation, and also you need the money to work harder so that it can generate more money for you. Okay, right. So that's the basic part of financial planning. You need to understand that first of all, you need to work. You need to start earlier, okay, and also you need to understand that you are working against inflation. So you need these two elements are working with you. All right. So don't let the money beat you, and also don't let the inflation beat you as well. Okay, because if you lose to these two elements, they are they bring harm more than good to you. Okay, right? So what are the 5 stages of Islamic wealth management or wealth planning? First of all is the wealth creation. Okay, what are wealth creation. So wealth creation is the process of you generating your income. It can be your salary, it can be your businesses, it can be your royalty, it can be your side income, it can be your rental income, it can be uh, uh, any other income. Okay, so basically the wealth creation part is where you need to work. Okay, you need to work, then only you getting paid. For example, if you go to work and you get your salary, that or your wages, is this is the basic concept. Okay, same goes to your business. So when you are doing your business, then only you getting paid, then this is considered as wealth creation. Okay, so from this wealth creation, so let's say you are generating, let's say, 5,000 ringgit every month, or 10,000 ringgit in terms of income every month, right? So these are the wealth creation. So what are you going to do with this 5,000 or 10,000 ringgit? Okay, so for example, I think for younger people, I think 5,000 would be a good example. So this 5,000, how you want to allocate your money? Okay, so you need to put it some for your protection, for your wealth accumulation, your purification, and also your wealth distribution. Right. So in Islamic point of view, okay, each and every part, okay, of the wealth management or the financial planning, okay, you need to adhere to some rules and regulation that are mentioned by the Quran and also Hadith, right? So, for example, for your wealth creation or your income, it must come from allowed activities, okay, such as trading, such as working. Working for, but driving Grab car, okay, for example. Okay, you cannot make your wealth or create your wealth from prohibited activities such as prostitutions, gambling, and so on. Okay, right. So that's the wealth creation part. Okay, the second part is wealth protection. Okay, so what are the wealth protection? So each and every day we are facing risks. Okay, we are facing this. We are dealing with risks. If it's either you like it or you don't like it, you have to face some risks. Here are some examples of risks that are very, very close to us. Some are, for example, the risk of your toilet, okay, leak toilet, okay. There's a risk of leaking toilet, your house getting burned, okay, and also you get sick, okay, fever, or you get some serious illness, you need to get warded. Some other risks, you may get accident, okay, accident during driving or riding motorcycle, you hit by someone else, or you involved in an accident. Okay, so these are the common risks that we are facing each and every day. Okay, maybe you exposed to falling the stair and you get broken arms. Okay, so these are the risks that we have to deal each and every day. Okay, let's say so how you want to mitigate all these risks. Okay, so in the risk management side, there are a few strategies that we can use. One of it is risk mitigation, risk sharing, or risk transfer. Okay, so some of the risks you can share with the other people. You can take takaful protection for your medical needs. Okay, and also you can get takaful protection for uh, income protection. Okay, so these are tools that you can use. Right. You also can use some other strategies. Okay, for example, leaking toilet or repair your roof, or your car breakdown. Okay, so if you involved in accident, you can claim from your car insurance or car takaful, right? But if your car break down, let's say your tire getting punctured, or your battery getting weak, you need to change, or your fuel pump or your water pump get broken. So how you want to solve this issue? Okay, so you cannot claim from your insurance or your takaful, right? So you need to have your own sinking fund or your uh, emergency fund. Okay, so these are two strategies that you can use to protect your wealth. So that, okay, let's say I have my emergency fund, let's say 10,000 ringgit. So if my car broke down, okay, I can use this fund to fund whatever uh, issues with my car. Let's say I can change my tire, I can change my fuel pump, I can change my water pump. Okay, so it won't hurt my cash flow. Okay, every month. So that's how you want to mitigate all those risks. Okay, next one is wealth accumulation. So here is where you are involving with trading, involving with investing. Okay, so in wealth accumulation, you want your money to work for you. So you need to accumulate, for example, some of the assets. Okay, it can be liquid asset or non-liquid asset. Okay, it can be house, it can be land, it can be equity, it can be REITs, can be ETF, and so on, or unit trust. Okay, so that's how you want to use wealth accumulation. I will go in detail with the wealth accumulation process, with the example of what are the tools that we can use for our wealth accumulation. Next one is wealth purification. So I think this wealth purification and wealth distribution are two main parts that distinguish Islamic financial planning, Islamic wealth management, compared to the conventional planning. Because in the conventional planning, you only care about wealth creation, and also wealth accumulation. But in the Islamic point of view, we have this wealth purification and also wealth distribution. In the conventional, you have also wealth distribution, where you can write a will. Yeah, you can give part of your wealth to your next of kin. Okay, but the wealth purification is what are main component that distinguish between the conventional one and also the Islamic one, where the wealth purification, okay, is in Islamic point of view. Okay, we understand that in each and every our assets or our wealth, there are some portion for the poor. Okay, we need to give back to the poor, okay, to help them to build a better society. Okay, so that's the wealth purification where we're talking about zakat. Okay, right. So for a Muslim, okay, it is compulsory, okay, to pay for 2.5 of your wealth to the poor, right? Provided that it pass a certain benchmark, and there are a few other criteria for the asset to be zakatable asset. Okay, right. So I already mentioned to you about cash flow. So cash flow, what are cash flow? Cash flow is the money that you receive, okay, minus the money that you spend. Okay, so if you have extra money, okay, let's say you getting 5,000 ringgit and you spend for 4,500 ringgit. Okay, so you have extra 500 ringgit, so it becomes a surplus. Okay, but if you have 5,000 ringgit, okay, and you spend for 5,000 ringgit at, so we call it as equilibrium point, the very, very bad one is when you have deficit. So let's say you getting 5,000 ringgit for your income, but you have to spend for 6,000 ringgit, then you are in the deficit zone, the danger zone, right? So you need to check your cash flow, so that you have a surplus cash flow, right? So in the conventional point of view, okay, we can understand the cash flow management by income minus expenses become the saving. But this, I quite disagree with this concept where, okay, I have 5,000 ringgit and I spend 4,500 ringgit and I get 5,000 ringgit of saving. Okay, so I would prefer, whatever that I get for my income, then I put aside for my saving first, then only the rest I will spend. Okay. This is much better to the compared to the first concept, because you, but by hook or by crook, you're putting some of your money, okay, forced into your saving account or your investment account. Then only you can spend whatever left from what you have. Okay. And this is not new concept. Okay. And this concept, okay, is not my own concept. Yeah, I pick it, I inspired from the Quran itself. Yeah, especially for Muslim. Okay. I mean, this is a better way lah, because it's from the Quranic verse. Right. So from the Surah Yusuf 47 to 48. Okay. There are story about Joseph having having an idea. Okay. So for 7 years, okay, for 7 years, is a good time. Okay, 7 years of good time and 7 years of bad time. So in the Quran, okay, in the Quran, it teaches Joseph, okay, what are the key point here is that, okay, you will plant for 7 years consecutively, and what you harvest, leave it in its spikes. Okay, leave it in its spikes, except a little from which will you eat. Okay, so then will come after that 7 years, is the 7 years of difficult years, okay, which you will consume of what you have saved from them, except a little which you will store. All right. So what we understand here is that, okay, in the Quran, it teaches us that whatever you have, okay, you need to save it first. Okay, then the rest of it you can eat. Okay, so save first, then only you can eat or spend whatever rest amount of it. Okay, so these are the point that we can learn from this Islamic school of thought. Okay, next one is, what are the prohibited activities? Okay, so it applicable to each and every stages of Islamic financial planning. Okay, so one of it is the usury. Okay, uncertain transaction. For example, you cannot buy apa what cattle, cattle. Okay, cattle that are not yet born. Okay, all right. Also, you cannot involve in the gambling activities, fraud, okay, and also buying and selling illegal goods. In Islam, tobacco is prohibited. Also, transaction of tobacco considered as haram also. Okay. What are the Sharia compliant instruments? Okay, I believe we need to go a bit faster. Okay, right, because we have this Q&A session after this, right? Okay, so what are the instruments that are Sharia compliant? Okay, so we have this saham, or we call it as shares or equity. Okay, right. So what are equity? Okay, what are equity? So equity is about you having some ownership in some of business. So for example, these two monkey, one of a seller and one of the other monkey is the buyer of for the ice cream. So the seller of the ice cream, okay, he has the business of selling ice cream. Okay, you can participate in the business, become the shareholders, become the partners of the ice cream business. In Malaysia, in Bursa Malaysia, we have a lot of businesses. Okay, you can be in gloves. Okay, because we have this some of viruses raised in China. Right? You can business in property development. Okay, you can also having business related to semiconductor, related to a data center, construction companies, petrol companies, okay, utilities companies, transportation companies, car manufacturers. Okay, you can have freight management, hospitals, okay, and so many businesses that are available in Bursa Malaysia. Okay, and can be involved in PV, not PV, the photovoltaic panels. Yeah, so there are a lot of businesses opportunities that you can invest in Bursa Malaysia. Right. Next one is the Islamic ETF. Okay, so maybe you ever heard of ETF. Okay, what are ETF? ETF is the uh, exchange traded fund. Okay, so you can own a basket of uh, equity. Okay, a basket of equity. For example, okay, we have this ETF that available in Bursa Malaysia, where you can own companies in the US. Okay, top 50 companies in US. One of it is Tesla. So basically, when you own this ETF, okay, you become the unit holder for Tesla also. Okay, right. Next one is the REITs. Okay, what are REITs? REITs allows you to become a shareholders or unit holders of property management companies, and these property management companies, they will manage some of the properties, and the rental income from the property management will be distributed to the among the unit holders in terms of the unit distributions. Okay, so these are some understanding of Sharia screening concept. So it's not easy for a company to be classified as Sharia compliance. They have to pass these 4 filter, then only they can be considered of Sharia compliance securities. If they fail any one of the filter, they will be classified as Sharia non-compliant securities. Okay. For the investors who are looking into the full concept or full Sharia compliant securities, okay, you can take part into the Islamic brokers or Islamic participating organization. Okay, brokers or investment house. Okay, where they provide you full Sharia compliant. Okay, end to end. Okay, end to end, from your deposits to your trading, clearing, and also your settlement. Okay, so full Sharia compliant process. Right. So these are part of the Islamic brokers. Right. If people are thinking that Sharia compliant securities that are limited choices, no, okay, because if you can see, 81% of the securities that are listed in Bursa Malaysia are Sharia compliant. Only 90% are Sharia non-compliant. Okay, so you have vast choices. Okay, some of my friends, non-Muslim friends, they are asking, hey, can we non-Muslim buy a Sharia compliant securities? Yes, you can buy, no problem. Okay, for a non-Muslim to buy a Sharia compliant securities, there are no restrictions at all. Okay, but for Muslim, it is a must for us to buy a Sharia compliant securities. We cannot buy Genting Malaysia, we cannot buy Berjaya Toto, for example, because these are Sharia non-compliant. Okay, Sharia non-compliant. We cannot buy Heineken, we cannot buy British American Tobacco, okay, BAT, because BAT involved in the tobacco business, and tobacco are prohibited in Islam. So, yeah, we cannot involve in the tobacco business. Okay, right. So, I already give you some overview for equity, what are equity or saham or what is share. Okay, so you as capital provider, okay, you become the shareholders for the companies. The companies issue their stock or share to be subscribed by the investors. Okay, and they will use or utilize this money for example, expansionary projects, or they get a government tender, they need to fulfill the procurement. Okay, so they need capital injection for investor, and they willing to share part of their equity to the investor. Okay, in return, the investor get a stake or ownership in the company. The company will get the raise fund or the capital, okay, so that they can run their projects, right? Compared to the ETF, okay, if that before this we are talking about shares, it's single shares, right? But ETF, you can own a basket of companies. So let's say you're buying one ETF, okay, it comprises of 4 companies, for example, company A, B, C, and D. Okay, so when you are buying this one ETF, you already get all those companies in the basket itself. Okay, it helps you with diversification. It helps you to involve in the some of us, they are not into active trading, they are more to passive trading or passive investing. So you can go for indexing strategy. Okay, no problem. Right. So for example, this EQ8 Dow Jones US 1350. Okay. So these are the top 10 holdings for this ETF. There are 50 companies. So these are only the top 10 from the 50 companies listed. Okay, so one of it is the Apple, Nvidia, Microsoft, Amazon, Meta or Facebook, WhatsApp, right? Alphabet, Google, okay, Google, so Google, Android, Eli Lilly, Broadcom, and also Tesla. Okay, so REITs, okay, REITs, you invest in the REITs management companies, okay, and they manage the assets, okay, such as factory, shopping mall, hospitals, warehouse, land, okay, but usually they don't own land. They already develop, okay, property, okay. So the money that you give or you put as an investor, okay, will be used to as acquisitions, okay, of assets such as a warehouse or shopping mall. Okay, so this warehouse, okay, will be leased, and you will get a rental income. Okay, you can get a rental income. This rental income will be collected, okay, from all the tenants, and will be distributed in to the investor. the REITs company, okay, the REITs company are obliged to distribute 90% of their profit to the unit holders or the investors. Okay, so 90%. So if you are looking into a high dividend, okay, high dividend stocks, you can look into some of the REITs. Some of the REITs are Sharia compliance and some of the REITs are Sharia non-compliance. Yes, you can look into what are the options that are available for you. If you are Muslim, you are obliged to buy a Sharia compliant REITs. Okay, but if you are non-Muslim, that you can choose either you want to invest in Sharia compliance REITs or you want to invest in Sharia non-compliant REITs. Okay. As you can see, some of them are giving a decent return, but some of them giving not that lucrative. So you need to do your own analysis. Right. So let's say these KLCC REITs, okay, they own these three properties. First one is the Petronas Twin Tower. Okay. The second one is the Menara 3 Petronas, the third tower. Okay. So most of people, they are thinking Petronas only have these two towers. No, they have three towers actually. Okay. And also the ExxonMobil Tower. Okay. So these three properties are managed under the KLCC REITs. We have these pavilion REITs. Pavilion REITs are national compliance. Okay. We have these Al-Aqar, which manage all the hospitals under KPG Healthcare. Okay, we also have this Asalam REITs. We have also Exist REITs and other few other REITs that are available in the market itself. Right. So when you're talking about the performance, because some of us might consider why I should invest in the Sharia compliance securities or Sharia compliance instruments where I can do well in the conventional way of investing, right? So if we look into the data, okay, these are very interesting data, okay, that I picked from one of the research. But the research are limited to the prior COVID-19. But I already extend the charts, okay, the charts during to the COVID-19 period and also what are happening after the COVID-19 period. If we are looking into the charts, okay, prior to COVID-19, we can see the green line. The green line is the Sharia FBM Sharia index. Compared to the blue line is the FBM KLCI index. Okay, so FBM KLCI is the conventional one, and also the FBM Sharia only comprise of the Sharia stocks or Sharia equity only. Okay, so prior to COVID-19, we can see the green line of the FBM Sharia, the Sharia stocks performing much better compared to the KLCI index. Okay, and during the COVID-19 period, which is 2020, 2021, okay, we can see, okay, it badly impacted by the COVID-19. It becomes a systemic risk. Everybody get hurt by the COVID-19, but it rebound much stronger compared to the FBM KLCI itself. Okay, and this shows that, okay, the Sharia compliant stocks, okay, much more resilient, okay, and forming better over the time. And we can see since the inception, okay, until now, 2025, okay, the performance of the Sharia index, okay, exceeds the KLCI itself, right? Right. So this shows us that investing in Sharia, okay, Sharia concept, by investing in the Sharia concept, okay, you can still make money, okay, but I want to put a disclaimer here. It doesn't guarantee you make a good money, okay. You still can lose your money, okay. That's why you need to do your analysis so that you can pick a good company for you to invest in, right? But when talking about the index itself, okay, the FBM Sharia exceeds or supersedes the FBM KLCI, okay. For those who are not familiar, what are the FBM KLCI and what are the FBM Sharia? FBM Sharia is the index that we use to gauge the performance of the Sharia compliant securities. Okay, where the FBM KLCI is the conventional benchmark that compromise of Sharia and not also non-Sharia compliance securities. Okay, right. So I believe we come to the Q&A session, right? So Shaz, if there is any questions from our audience, you can share with us, right?
Right. Thank you so much. Thank you, Mr. Faiz Wahab, for your invaluable insights. So, Shaz, I'm gonna share a screen first. Wait. Hi, can you see my screen?
Yes, can.
All right. Okay. Is it okay now?
It's still on the PowerPoint mode. It's not on the slide mode.
Oh, it's in the PowerPoint mode, is it?
Yeah.
All right, so we are in a Q&A session. So if you have any questions to our speaker today, Mr. Faiz Wahab, you can type your question in the Q&A box. Yeah, I think got a bit of glitch. I think I should share using this. A bit of glitch, sorry guys. All right, I have to jump to the Q&A session. All right, okay, back to the Q&A session. So if you have any questions, please type your question in the Q&A box. Okay, we have the first questions. How Sharia compliant investment manage risk compared to conventional investments, especially in a volatile market?
Okay. So I think you need to restructure the question, okay? Because how Sharia compliant investment manage? So you are talking about the investment managers or what? Okay, all right. So I assume the question is that Sharia compliant securities, okay? So when we're talking about the Sharia compliant securities, okay, there are if you remember my slide, there are 4 criteria or 4 filters that need to be passed. One of it, the core activities, the mixed activities, and one of it is the financial ratio. So for the financial ratio, okay, for a company to or instrument to be classified as Sharia compliant, it must be good in the financial ratio, okay, and that's why, okay, that's why when we're talking about the financial ratio, they are looking into the debt, then they are looking into the cash part also, right? So by adding this filter, okay, it gives us the understanding for the company to become resilient, okay, to become resilient because they cannot have too much debt, okay, they cannot have too much debt because if the company has too much debt, it will have some debt management later on, debt management issues later on. So that's why, okay, based on the I quote from one of the research that been done, why we are looking in the Sharia compliant index, okay, performing much better compared to the conventional one, okay. One of the assumptions, okay, made by the managers are these companies already passed the financial ratio benchmark filter, okay. But I need to put some caveat or some additional uh, uh, point. Even though these companies having a good record for their financial ratio, okay, this company also can have some issue, okay, as so they are still have the risk into going into a bigger debt than they can pay. So even though, okay, even though this filter can help you, okay, but you still need to make your own due diligence before investing in any companies, right? So that's why, okay, that's why in volatile market, usually these companies are less prone to the volatility, okay, less. But if, okay, if something bad like COVID-19 happens again, okay, we hope it won't happen again. But if a systemic risk happen, but so everyone will get impacted, okay. But the question is how much it will impact it, okay, how much the volatility will occur to that particular stocks, right? So I think that's my answer for the first question, right?
All right, for the second questions coming from Miss Adiba here. So she would like to know what is your expectations or opinion on FPM KLCI performance for this year?
Okay, so I a bit optimistic about our FBM KLCI because we see some new opportunities into the Malaysian market. Okay, but there are some risks. Okay, there are some risks. Obviously, the global tension. Okay, the war that happening. Okay, but what are the biggest risks to all those investment managers and also investors are uh, Mr. Trump. Okay, so when Mr. Trump step into the office, the market will react within a tweet. Okay, so one tweet can change the market direction. All right, so you need to beware, okay, of Mr. Trump tweets, okay, especially when he officially be in the office. I think they already make some move, okay. If not mistaken, on Wednesday, okay, Wednesday when US implement some of the sanction for AI generated chips, okay. So our Malaysian market get quite badly impacted, okay. But I think there are still some room for our Malaysian market, okay. There are still room for Malaysian market, but we need to look and wait for what are Mr. Trump trying to do and what are our government will announce to mitigate this issue. Right.
All right. For the third questions, I mean, I agree with the Trump. When Trump says something, there will be a movement in the market. Like, I've been through with this also since I'm a trader myself. So I agree with you, Mr. Faiz, about that. Okay, for next question coming from Mr. Zakaria. So while the compounding effect is powerful for wealth growth, so how does paying zakat annually can influence the long-term growth of a Muslim investment?
Okay, all right. So, from the zakat point of view, okay, the growth of Muslim investment, right? So, I think he's asking in terms of the individual point of view. It's not looking into the bigger picture of the zakat management system itself. But in terms of the individual, right? So as a Muslim, we understand that, okay, we understand that zakat is compulsory, okay, for everyone who has certain threshold of wealth. Okay, so it's not compulsory for everyone, but if you have some amount of money that exceeds the threshold, then you are obliged to pay for your zakat. Okay, and we also understand that, okay, the barakah, okay, the concept of barakah itself, okay, when you pay for your zakat, you do your obligations, okay, then the God will repay you, okay, maybe in terms of the monetary, you can get bigger wealth, okay, create more wealth, okay, your daily activities become easier, okay, and also you get pahala, okay. So that's in terms of individual point of view, right? But when you're talking about the bigger picture, okay, because many people they miss this kind of point where you think, oh, why I need to pay zakat? Okay, this is my hard-earned money. I work for myself. I do this, I do that. Okay, so why I need to pay, right? So in the bigger picture, we need to understand that our society, okay, not everyone have the equal wealth. So the wealth need to be distributed. Okay, the wealth need to be distributed for among the rich and also the poor. And okay, if you're looking into the uh, zakat ecosystem, okay, so if okay, you are being the rich guy, okay, you being the rich guy, you have a conglomerate, you will be the business owners, okay, who are your buyers? Okay, the people in this society, including the poor. So if the poor do not have money, okay, to spend or to buy goods, then who will move the economy? Because we need to understand our economy is not about the rich only, because the rich, they will hoard their money, okay, and when they hoard the money, okay, the money in the economy will not circulate, okay. So when this happen, okay, when the economy is not circulating good or circulating enough, it will be stagnant in the economy itself. So that's why, okay, when we distribute a small portion of our wealth to the poor, okay, it helps the poor to buy things, right? So the rich, they only buy some of the good things or goods of things, okay, the rest they will hoard. But the poor, they will not save their money. They will spend all of the money, and this will help to spur the economy, and it lets the money to continue to flow in our economy. And that's why it helps to build businesses, okay. If not, okay, if there is no zakat or in conventional way we call it as a tax, okay, aids to the poor, okay, the economy will stop. And if that happens, okay, not only the poor become a problem, have the problem, but also the rich people. Okay, the rich people, they cannot make businesses and they cannot generate return, and the economy will become stagnant and the economy will collapse. Right? So look the zakat payment as a big picture. Okay, it helps to spur the economy itself. Right? So yeah, for long term, that's my answer.
Right. Thank you for the very insightful answer from coming from Mr. Faiz. I believe that as a Muslim myself, yeah, we need to purify our wealth. And also, I agree on the part where Mr. Faiz briefly explained to us that by giving, we also are getting back, because of the poorer will spend their money, and also we are the richer. Also, we are doing something about the money. So it's like a food chain ecosystem and also balance the economic system. I believe that zakat itself has a bigger impact for the community itself. And I highly recommend it for all Muslim out there to pay zakat whenever you already pass your threshold. All right, for the next questions, if you guys have any more questions, please don't be shy. Type your questions in the Q&A box. So, by the way, since we are talking about zakat, right? So, how about we would understand that if we are paying zakat, I mean, how can we calculate how much to pay for the zakat itself if it's already reached the threshold? I mean, in terms of zakat in investment.
Okay, right. So this is good question from
Yeah,
Jas.
I asked for myself actually, because
Okay.
I also I was thinking, like, since you were saying about threshold, right? So I
Yeah.
was thinking, maybe I already reached to the certain point that I need to pay more, because I randomly pay like that. So I would like to know about this as well.
Okay, all right. So first of all, okay, zakat is on wealth. Okay. So because some of people, they are thinking about, oh, zakat on saving, zakat on investment, zakat on income. Okay. So the zakat is obliged on your wealth. Okay. So I put aside zakat on income, okay, because it's a different discussion, but I would emphasize on the zakat on saving and also the investment part. Okay. So let's say you have some of saving in let's say a bank account, okay, and also you have CIMB account, Bank Islamic account, okay. So these are three savings account, right? And also you have investment in let's say in stock market, okay, in Bursa Malaysia, okay. Also you have cryptocurrencies, okay, because cryptocurrencies are right now zakatable asset, right? So cryptocurrencies, also you have unit trust, you have what a few other investment, gold, okay. But the zakat on gold is a different story, because a gold can be on jewelry, okay, it can be treated as jewelry, but gold also can act as investment tool. Okay, so when I'm talking about gold, there are two different things. So if you are talking about jewelry, then you need to treat the gold as jewelry. But when talking about gold as investment, so it falls under this category. So let's say you are living in Selangor, right? So you need to look at the threshold for Selangor. But if you are living in Kuala Lumpur, okay, KL, so you will refer to zakat LPZ, Lembaga Zakat. Lembaga Zakat KL lah. Okay. Sorry. Lembaga Zakat Selangor. Okay. Lembaga Zakat Selangor is for Selangor. PPZ. PPZ is Pusat Pengurusan Zakat for KL. Okay. If you are living in Johor, so you need to look what are the Johor thresholds. So each and every state in Malaysia have different threshold. Okay. So let's say you have this 20,000 ringgit of threshold. So you have 10,000 ringgit, sorry, 5,000 ringgit in Maybank, you have 5,000 ringgit in CIMB, you have 5,000 ringgit in Bank Islam. So it's 15,000 already. Okay. You have 5,000 in cryptos and 5,000 ringgit in Bursa Malaysia. So all in all, you have 25,000. So your wealth already exceed this threshold of 20,000. So you need to calculate 2.5 from 25,000. It's not 5,000. Okay. So it's not your tax. Okay. Because tax on the excess of your taxable income. Okay. But for zakat, okay, the excess, sorry, you need to calculate 2.5 from the total wealth after exceeding the threshold. But if you have, like, say, 1,000 ringgit in Bank Islam, 1,000 ringgit in CIMB, 1,000 ringgit in Maybank, and then you have 5,000 ringgit in Bursa Malaysia, 5,000 ringgit in cryptos. So you have only 13,000. So 13,000 is not zakatable. So you are not obliged to pay for your zakat. But if you want to put it as a sedekah or gift, okay, or you want to give it as charity, okay, you can do that, okay, as additional part. Okay, but you are not obliged to pay zakat if you are not exceeding the threshold. So you need to put all your investment, your saving, and you need to calculate. Let's say you have account in overseas account, okay, you need to put all of that, okay, as the saving and also your investment. Then you calculate 2.5 from it. I believe I answer your question, Shaz.
Yes, thank you very much. So I believe that we are running out of time. We are exceeding the time. So I would like to sincerely thank Mr. Faiz for taking the time to respond to the question asked, including my questions. I hope that all of you have acquired new and useful knowledge from this session. May the insight shared today prove to the advantages in your investment and trading pursuits. Okay.